Aditya Shah joins us now. And Aditya, let's first talk about the positioning of private banks. We've got numbers from Axis, Kotak, HDFC, and ICICI Bank. Rate the numbers for us, one, two, three.
Uh, Good morning, Nikunj. I would rate number one as ICICI Bank and HDFC Bank joined. We did not see an improvement in the margins from HDFC Bank. However, ex of agri loans, HDFC Bank's results were also good. ICICI Bank, as you said, is now the clear market leader within the large private sector banks. Uh, HDFC Bank has lost leadership because of the merger issues that they are going through. However, they will come back over a period of next 6 to 12 months. If you rate the top private sector banks, number one would be ICICI Bank and then HDFC Bank. Kotak Bank this time around did report a good set of numbers. They will be there, number two, joint with the Axis Bank results. Net, very, very happy with the larger private sector banks at a time when the entire sector is facing microfinance NPA, credit card NPAs. These banks have continued to do well. Over the period of next 1 or 2 years, we will see a shift from the smaller banks to the larger banks as the credit cycle moves on and the NPAs start to come.
Why is ICICI Bank able to grow on such a large base in this kind of an environment? I mean, are they gaining market share? Are they taking higher risk? Because what are they doing which others are not going? Because others are struggling with credit growth also.
Nikunj, brand, ICICI Bank does have a very strong brand, and Sandeep Bakshi yesterday made it very, very clear that ICICI Bank will not take risks within the unsecured space where a majority of stress really is. So prudent lending together with the franchise that they have gotten together, the woes of 2016 to 2018-19 are behind. Sandeep Bakshi has made it into a super high quality brand, and they have now decided that they will do prudent lending. In fact, Sandeep Bakshi also said on the call that they will stop the unsecured lending if they feel that the NPAs are rising way beyond the tolerance level. I, as an investor in ICICI Bank, will want to hear this from the management. They are concerned about the NPAs rather than the growth. So prudent management, uh, good lending is what is leading to the market share gains that ICICI Bank is already taking. And this is also contributed by the fact that HDFC Bank has had to slow down their lending. If you look at the HDFC Bank loan growth this quarter, they had to slow it down because they wanted to bring the LDR in line. The space vacated by HDFC Bank is now brilliantly getting filled by ICICI Bank. And when HDFC Bank is also up and running, you will feel that both of these companies will start to lead the economy on a economy higher as a whole.
Aditya, let's analyze a Kotak wherein you've seen the stock market positioning. The stock has really been at a low and has done nothing other than the move post its numbers. And then there is Axis and the kind of sharp reaction, even though it was an inline profitability that they posted from the markets post the numbers, and the kind of fall that the stock has seen since.
So, Aisha, on Kotak Mahindra Bank, the Uday Kotak premium is now washing away. The market is looking towards the new management and what kind of strategies will they employ. Together with the 811 ban from the RBI, it has led to Kotak not doing exceedingly well over the last 3 years. In fact, Kotak has given negative returns. Now, as the new management stabilizes, they work towards the 811 fiasco that has happened, and the RBI removes it. That will be the real fill-in for the stock per se. Mind you, the stock trades at about 10-year low valuations, and it could be extremely aggressive for a long-term investor who's eyeing about 3 to 5 years. I could see Kotak Mahindra Bank outperforming the market per se from here on. When you look at Axis, a little bit of concern on the NPAs continues to be there, and that is why the market behaved negatively on the Axis Bank stock. But mind you, Axis has also done pretty well as Amitabh Chaudhary has come and joined in. A franchise is starting to get developed within the Axis Bank portfolio as well. So if you were to look at the hierarchy, I would continue to hold ICICI Bank and HDFC Bank purely on terms of valuation as joint number one. There's no room for re-rating in ICICI Bank. But if HDFC Bank moves their NIMs over a period of like 6 to 12 months from 3.4 to about 3.6, 3.7%, that could be a real fillip to the market as well as the HDFC Bank stock. And then after these two larger banks, my preference would always continue to be with Kotak, where the valuations also have corrected and they are also trading at 10-year low. It will all hinge on the fact that how Kotak Bank is able to build through the RBI embargo on the 811 ban that they have put in.
Right. Okay, Aditya, great to have you on the show. Thanks as always for taking the time out and joining in.
If you like this video, then like, share and subscribe to ET Now.